Let's talk about something most people ignore until it's too late. Your money is silently being stolen every single day. And no, I'm not talking about theft or scams. I'm talking about inflation. Right now, the US dollar, the world's most trusted currency for decades, is losing value at a dangerous rate. Every time the government prints more money, your dollars become less valuable. That $100 you saved a year ago, it buys less food, less gas, less of everything today. This isn't just a temporary issue. It's a long-term trend. In 1971, President Nixon took the dollar off the gold standard, meaning the dollar was no longer backed by anything real. Since then, the dollar has lost over 90% of its purchasing power. Think about that. The same dollar that used to buy you a cart full of groceries now barely fills a bag. That's inflation. That's financial erosion. And the worst part, they don't teach you this in school. They tell you to save money, but they never tell you that saving in cash is actually losing. This is where Bitcoin comes in. Bitcoin is not controlled by any government. It has a fixed supply of 21 million coins. No one can create more. That makes it immune to inflation. Every 4 years, Bitcoin undergoes a halving, cutting the new supply in half. That makes it more scarce, more valuable, unlike the dollar, which just keeps getting printed into oblivion. Look, while you're holding on to cash, hoping for interest from a bank that barely beats inflation, smart money is flowing into hard assets like Bitcoin. The elite are protecting their wealth, and you should too. The dollar may not crash tomorrow, but it is dying a slow death, and every day you hold on to it, you're falling behind. Bitcoin offers a way out of this broken system. It's decentralized, transparent, and built to preserve your purchasing power. So the question isn't, can you afford to buy Bitcoin? The real question is, can you afford not to? You've heard about Bitcoin for years. But now, it's not just retail investors or tech nerds buying in. Wall Street is here. The institutions have arrived. We're talking about financial powerhouses like BlackRock, Fidelity, JP Morgan, and Goldman Sachs, firms that manage trillions of dollars, all now either investing in Bitcoin, launching crypto-focused products, or building Bitcoin ETFs for their clients. Let that sink in. BlackRock, the world's largest asset manager, filed and launched a spot Bitcoin ETF. This isn't just some crypto experiment. They don't make moves like this unless they see massive profit potential. These institutions aren't here to play games. They're here to profit and dominate. Why is this important for you? Because for over a decade, Bitcoin was treated like a joke by mainstream finance. But now, the narrative has flipped. Institutional adoption is the ultimate stamp of legitimacy. It means Bitcoin isn't going away. It's going mainstream. And when these giants move in, they don't buy a few $1,000s worth. They buy millions, even billions. This kind of demand doesn't just move markets, it transforms them. It creates a supply shock. There are only 21 million Bitcoin that will ever exist. Institutions fighting for a limited supply. That's a recipe for explosive price action. Here's another key point. With institutional adoption comes infrastructure, better security, easier access, trusted custody solutions, and regulation. That means more average people will feel safe investing, driving even more demand. Think of it this way. We are watching a massive wealth transfer in real time. The same institutions that called Bitcoin a scam 5 years ago are now buying up as much as they can. So here's the question. Are you going to wait until Bitcoin hits $150,000, $250,000, or even $1 million before taking it seriously? Or will you position yourself before the next institutional wave hits? Because whether you believe in Bitcoin or not, BlackRock does, Fidelity does, Wall Street does. And when the giants move, they don't ask permission. They just buy in. Let's talk about one of the most powerful forces in Bitcoin, scarcity. Because while governments keep printing dollars like there's no tomorrow, Bitcoin is the complete opposite. There will only ever be 21 million Bitcoin. Not one more. Not ever. This isn't a guess, it's written into the code. It's math. It's unchangeable. It's scarcity by design. Now here's where it gets even more interesting. Every 4 years, Bitcoin goes through a process called the halving. It cuts the number of new Bitcoins entering the market in half. Yes, 50% less new supply overnight. The last halving happened recently, and the reward for mining Bitcoin dropped from 6.25 to 3.125 BTC per block. That means less Bitcoin is being created, less is available to buy, and demand is only going up. Think about it. When something is rare, people want it. When something is rare and in demand, the price explodes. We've seen this pattern before. After the 2012 halving, Bitcoin skyrocketed. Same after 2016. And after the 2020 halving, Bitcoin surged from under $10,000 to an all-time high of $69,000 in less than 18 months. So what do you think is going to happen this time? And it's not just the halving. Over 19.7 million of the 21 million Bitcoins are already mined. That leaves only about 1.3 million left, forever. Add in the fact that millions of Bitcoin are lost or locked forever, and the actual circulating supply is even smaller than people think. Now combine that with institutional demand from companies like BlackRock and Fidelity, retail investors jumping back in, and countries exploring Bitcoin reserves, and you've got a perfect storm. This isn't hype. This is basic supply and demand economics. Low supply, high demand, prices go up. But here's the catch. Once the world realizes just how limited Bitcoin truly is, it'll be too late. Because by the time everyone's trying to buy some, there won't be enough to go around. So ask yourself, do you want to chase the rally later? Or get in while Bitcoin is still available? In times of peace and prosperity, people trust the system. But right now, that trust is collapsing. And when trust disappears, money flees to safety. From wars in Eastern Europe and the Middle East, to economic meltdowns in countries like Argentina, Venezuela, and even Turkey, to rising tensions between global superpowers. We are living in an era of unprecedented global instability. And when things get shaky, when banks freeze withdrawals, when currencies crash, when governments seize assets, people look for one thing. Hard assets, gold, real estate, commodities. And now, for the first time in history, Bitcoin. Why? Because Bitcoin is digital gold. It's decentralized. No one controls it. It can't be printed, seized, or inflated away. You can take it across borders with nothing but a password in your head. Ask yourself, if your home country was collapsing, what would you trust? A local bank that might freeze your account? A currency that's lost 90% of its value in a year? Or a global, borderless currency with a fixed supply and unstoppable network? We've already seen this play out. In Lebanon, where banks closed for weeks, citizens turned to Bitcoin to survive. In Ukraine and Russia, during wartime chaos, crypto became the only way to move money safely. In Nigeria, where inflation has destroyed the naira, Bitcoin is booming among the youth. This is not theory. It's happening right now. People in crisis are teaching the rest of the world a lesson. You don't wait until it's too late to protect your wealth. And it's not just individuals. Governments and institutions are also shifting toward hard assets. Central banks are buying gold at record levels. And behind the scenes, many are accumulating Bitcoin, whether directly or through ETFs and custodians. The global financial system is showing cracks, and those who see the writing on the wall are moving to scarce, reliable, non-correlated assets. So here's the truth. When the world is on fire, you don't want promises. You want proof. You want control. You want freedom. And right now, Bitcoin is that freedom.